The stock market had a brutal week this week, and there are a couple really important things to know. In this video, we're going to talk about two main points. One for those who are looking at the stock market for the short-term opportunities, and the second point is for those who've been buying the dip just to see the dip keep on dipping. So in this video, we do have a couple things to go over that are pretty important. So the first thing I want to talk about is how obviously the market got destroyed this week, but there are some good things to know about this. So we are coming to a very crucial support level right around $360 on the SPY. And check this out. If I go to an even longer term chart of the SPY, and it's kind of sad to say this, but we're actually getting pretty close to the pre-COVID high on the SPY, which was right around $340. Over the past couple months, the SPY went from like 480 down to 367, and the SPY high pre-COVID was right around 340. So we are getting very close to that level, and that level is a gigantic support level. So keep that in mind. But looking at the SPY over the past week, we saw just a crazy amount of selling pressure, and this should bring in a ton of opportunity for next week for short-term trading, because check this out. If we zoom into past crashes, a lot of times you see the biggest green days after some of the most violent red days, and actually you see a lot of the biggest green days in the market overall during stock crashes because volatility is heightened by a ton. So basically, we saw a giant sell-off this week, which a lot of times historically, we normally see at least decent-sized pops back up shortly after these types of events. And now what is also pretty cool is that there's not too much resistance on the SPY until like 375. So right now at the time of this recording, the SPY is at like 367, and it's basically free range up to 375, with the next major resistance being closer to like 384. So, you know, there's definitely a lot of like wiggle room to see the SPY pop up. IV is high, but it's, you know, of course it's increasing just given everything that we've been seeing in the market lately. But what is also very relieving is that we are finally seeing yields calm down just a little bit. So check this out. Right here, the 2-year Treasury note futures, and obviously they've been getting destroyed over the past year, which means yields have been rising. But now that we're seeing Treasury note futures pop up a little bit, it means that yields are actually falling a little bit. And one of the biggest reasons of the stock market tanking this year is because yields have been rising so much. So now that we're finally seeing yields calm down a little bit, that is actually a pretty good sign for the market. So keep that in mind. And there's one other thing I wanted to cover, especially for those people who, you know, are looking at the market right now. Maybe they own a couple stocks and they're wondering, when is this going to end? Like, what should I do? And, you know, maybe they're considering selling. I wanted to bring this article up from basically Warren Buffett. And basically he said, you know, when stocks are tanking down, he's found it best to just sometimes not watch the market. I know it sounds funny and kind of dumb and weird, but like, it hurts when your stocks are tanking down. Like, it sucks. It really does. But don't let the news headlines and scary articles and, you know, all the fear make you do something that your future self would criticize, if that makes sense. So as long as you're buying into solid companies, like even Warren Buffett, who's been plowing billions of dollars into a lot of stocks, some of the stocks he's been buying have been falling, but like Warren Buffett's not out here panic selling. So, you know, if you're looking at the market right now and you're struggling and you're worried, even though it sucks and it hurts during stock crashes, remember, just think about what your future self would want you to do, right? And sometimes if it hurts looking at the market, you know, you don't have to look at the market every day. But I figured I'd bring that up because I don't want people panic selling, especially during these times with scary news articles every day. But looking at the market, it's green today, finally. So some stocks are popping up like Apple, Microsoft, Amazon, and Meta. These powerhouse companies are kind of leading the market higher today. Looking at some of these stocks, they've been selling off so much where I can see a pretty nice chance of the market popping up next week as long as no crazy news comes out. It's very rare to see stock drops this violent in the market. And a lot of times when we do see these happen, there's normally at least a little pop back up just for like the sake of like price action and volatility. So keep that in mind. In terms of like a macroeconomic sense, things can definitely get a lot worse. But keep in mind, that's why it's the best way to go is just dollar cost average, slowly buying over time, and your future self should thank you quite a bit. But overall, the market's crazy. Remember, try not to get too freaked out about these scary headlines. Remember, the next resistance on the SPY isn't until like 375 and then like 384. Up to those levels, it's basically free range. Support at 360 and then giant support at 340. So also don't forget that the stock market will be closed on Monday for the Juneteenth holiday. So keep that in mind. No trading on Monday. Besides that, thank you guys so much for watching and have a great weekend.